recently, India and about 130 other countries, along with G20 countries, arrived at a tax deal, an international tax deal, where they would now be able to go after big tech companies, big tech multinationals like the Google and the Facebook, and tax them in their countries. I'm Sachin Dave, Senior Assistant Editor with the Economic Times, and will talk about what this really means for the world and for India. Some of the largest economies realize that the multinationals such as Google, Facebook, Amazon, and Apple have undertaken tax planning and they are escaping taxes. OECD and all the top members, including the EU and the US, China and India, decided to put in place a framework, base erosion and profit shifting, whereby they can go after these companies and tax them. After several deliberations over the past 2, 3 years, for the first time, it seems all the countries are on the same page. Up until now, US was not part of this negotiation, but after Joe Biden's government, even US is part of this process, which would mean that anything that comes out of this will have a bite force. So the way it happens is what has been decided as of now is, in technically speaking, it is something called Pillar 1 and Pillar 2. Pillar 1 is basically calculation of profit and how much profit these top multinationals make and how much should the countries tax them. Pillar 2 refers to the global minimum tax, which as of now could be anywhere around 15%. That would apply on these companies across the globe. That is, these Googles of the world and the Facebook of the world will have to pay 15% no matter what. India over the years have been complaining that companies such as Google and Facebook and Amazon and the likes have not been paying taxes that they are supposed to pay in India. The main contention or the rather an argument that India has is that most of these companies have huge user base in India, but in terms of percentage, if you look at it, Indian users are probably in high 30s or 40% in some cases, but they do not pay taxes in India. Indian government wants that these companies must pay additional taxes in India based on the user base. Indian government realized probably around 14, 15 that these companies are not paying enough taxes. In 2016, for the first time, Indian government brought in something called equalization levy, or colloquially known as Google tax. What Indian government did was they said that whatever be your income, you have to pay at least 6% on your advertising revenue from India. In 2021, that is this year, the government broadened the scope of equalization levy and has slapped 2% more tax on the top line of these companies, on many of these companies. Now, if India were to adopt BEPS framework, then India will have to let go of equalization levy. India will have to stop. India cannot have it both ways. Now, this is a. It seems India will do away with Google tax, and this is set to increase India's tax revenues going forward. Over the years, what many companies have been doing is they have been setting up the headquarters or the head offices in countries such as Ireland and Mauritius and Cayman Islands. Why these countries? These countries have been offering more or less zero taxes to these companies. So whatever taxes that these companies are supposed to pay, because the headquarters are based on these tax havens, they end up paying more, almost zero tax in some cases. Now, after this new framework, after this new tax framework, the tax havens will find it difficult, because whether you are based in Cayman Islands or in the US or in India, these companies will have to cough up at least 15% tax on their global revenues. The reason why this framework was put in place in the first place was that companies and countries, some of the biggest countries, realized that the multinationals have been escaping taxes to the tune of 100 billion every year. And where are these taxes going? They are not paying taxes anywhere. American companies are not paying taxes neither in America, nor are they paying taxes in countries such as India or in China. So how do you catch these countries? They basically are taking advantage of the loopholes in the tax system. This is when the countries realize that it is high time that they should go after these multinationals. It is still a work in progress, and some fine points need to be ironed out as to how much the profit has to be allocated and to which country. But going ahead, no company would be able to escape taxes as they have been up until now. This is Sachin Dave from Economic Times. Thank you.